You know, we're all living in this economy of freelancers, side hustles, and gig work. But the thing is, the safety nets we all count on, they were built for a completely different world, a 9-to-5 world. Today, we're going to look at what happens when those two worlds collide during a crisis, and how a simple piece of paper can be the difference between getting help and getting a huge bill.
And this, right here, is the central question. If you're self-employed, you know your work is real. You're doing it every day. But when a disaster hits and you need help, can you actually prove it to the government? That paper trail all of a sudden becomes absolutely everything.
All right, so let's set the scene. Our story kicks off in early 2025. The Los Angeles wildfires have just been declared a major disaster, causing chaos for tons of people. In response, a really critical support system gets activated. It's called Disaster Unemployment Assistance, or DUA for short.
So what is this DUA thing? Well, think of it as a federal lifeline, but it's specifically for people who don't qualify for regular unemployment benefits. We're talking freelancers, gig workers, small business owners. You get the idea. It's supposed to be the safety net for the modern workforce when a disaster totally upends their lives. And this is where we meet our central figure, Nicholas Donahue. He applies for this disaster assistance, and his claim seems pretty straightforward. He says the LA wildfires directly caused him to lose his self-employment work and his income. On the surface, it sounds like he's the exact person this program was made for. But as you'll see, the details are where it all starts to get messy.
So as officials started looking into his claim, a huge problem popped up. The story Mr. Donahue was telling to get disaster relief money, well, it didn't quite match the story he had told just a few weeks earlier to get a totally different kind of aid.
Okay, this timeline is absolutely key to understanding what's going on. So he leaves a regular job in October and starts collecting standard unemployment benefits. Then the disaster hits in January. A month later, his regular benefits run out. So what does he do? He immediately turns around and files for disaster aid, claiming he was self-employed right before the fire started. But hold on a second. How could he be both unemployed and self-employed during the exact same period?
And this is the giant contradiction at the heart of it all. See, to get regular unemployment, you have to certify every single week, under penalty of perjury, by the way, that you are not working. But to get disaster aid, he claimed that during that same exact time, he was working as a self-employed person. Both of those things just can't be true. It's one or the other. So with this glaring contradiction on the table, the whole case suddenly hinged on one thing: evidence. The government needed proof. And this brings up a really important legal concept called the burden of proof, which fell completely on the claimant's shoulders.
Now, this is so important to get. It wasn't the state's job to prove he wasn't self-employed. No, the burden of proof was entirely on him. He was the one who had to come up with convincing documents that showed, yep, his business was real, it was active, and it was operating right before the disaster.
So what does that proof even look like? Well, it's pretty much the standard stuff any freelancer or small business owner should have on hand. Recent tax returns, that's the gold standard. Invoices, contracts, they show you're actually doing work for people. And bank statements prove that money is actually coming in. This is the language government agencies speak. It's all about the paper trail.
But what the judge actually got was something else entirely. The business records he submitted, they were from 2022. We're talking 2 years out of date. The tax returns for the year in question? Nope, didn't have them. He did provide one single invoice, but then he admitted it wasn't even for money. It was some kind of barter deal. And to top it all off, his story about what his business even did kept changing. Was it billing? Property management? A nonprofit? This complete lack of clear, consistent evidence, it became a massive, massive problem for him.
So with all this contradictory testimony and a real lack of any solid documentation, the case went before an administrative law judge. And, well, the verdict was pretty decisive, and it was based on 2 major failures in his case. Wow. The judge's own words here are just incredibly direct. Pointing to that whole mess of claiming to be unemployed and self-employed at the same time, the judge basically said his testimony was completely unreliable. And that last line just says it all. The claimant cannot have it both ways. You just can't. So the whole decision really came down to 2 simple failures.
First, he flat out didn't prove his self-employment was a real, active thing before the fires. And second, he gave them zero evidence that his so-called business was even located in or was in any way affected by the disaster area. So on both counts, he failed. The claim was denied.
But the claim wasn't just denied. See, he had already been paid some benefits while his case was being reviewed. And now, that money had to be paid back. The consequence of this ruling was a bill for $4,400.
And under the federal rules for DUA, this part is totally non-negotiable. If you get benefits that you weren't actually eligible for, you are required to repay the full amount. It doesn't matter if it was an honest mistake or if you were intentionally trying to mislead them. The overpayment has to be paid back, period.
You know, this whole case really serves as a huge flashing cautionary tale for every single self-employed person out there. So the real question is, how do you protect yourself? How do you make sure that when you actually need help, the system can see that your work is real?
Okay, number one, treat your freelance work like a real business, right from day one. That means separate bank accounts, it's a must. Number two, get everything in writing. An invoice isn't just you asking for money, it's proof that you did the work. 3, and this is the big one, file your taxes, and file them on time. It is the single most powerful document you have to prove your livelihood exists. And finally, number 4, please read what you're signing. When you click that box online that says you're not working to get unemployment, just remember that statement can come back to bite you if you later claim you were working.
And that really brings us to our final big question. This whole case highlights a major disconnect, right? As our work becomes more flexible, more independent, the systems that were designed to support workers, well, they're really struggling to keep up. So the question for all of us is, how do we build a safety net that actually recognizes and validates the work that people are doing in the 21st century economy?